This is TradeFlow News, bringing you relevant news and insights from around the world. TradeFlow News, enabling trade for SMEs and economies worldwide.
These are some of the key topics that we will be looking into in today's program.
First, let's take a look at the overnight headlines which are impacting the commodity markets.
China's economy is recovering from a trough hit in the second quarter, with oil demand expected to rebound next year as Beijing eases COVID-19 restrictions, senior Chinese refining executives said on Wednesday. The recovery will come on the back of an expected contraction in oil demand in the world's biggest energy consumer in 2022, the first in 2 decades, as China's zero-COVID policy ravaged its economy and restricted movements. This year we have seen the decline of imports of crude oil, first time in many years in China, Chen Hongbing, deputy general manager at Rongsheng Petrochemical, told a forum at the 38th Annual Asia-Pacific Petroleum Conference, APPEC.
Oil prices rose on Wednesday following unexpected drawdowns in U.S. crude and fuel stocks, and as the U.S. dollar pulled back from recent gains, boosting commodities prices. Brent crude futures were up $2.82, or 3.3%, at $89.09 per barrel by 12:31 p.m. Eastern Standard Time, 16:31 GMT. U.S. West Texas Intermediate, WTI, crude futures rose $3.20, or 4.1%, to $81.70 a barrel. The dollar hit a fresh 2-decade peak against a basket of currencies on Wednesday before pulling back. A strong dollar reduces demand for oil by making it more expensive for buyers using other currencies. In early afternoon U.S. hours, the dollar index was down 0.9%.
Moving on to the top news in the energy sector.
The European Union on Wednesday promised a robust response to any intentional disruption of its energy infrastructure after saying it suspected sabotage was behind gas leaks discovered this week on subsea Russian pipelines to Europe. As gas spewed out under the Baltic Sea for a third day after first being detected, it remained far from clear who might be responsible for any sabotage of the Nord Stream pipelines that Russia and European partners spent billions of dollars building. Russia, which slashed gas deliveries to Europe after the West imposed sanctions over Moscow's invasion of Ukraine, has also said sabotage was a possibility.
Indian companies are still buying Russian oil using dollars after Dubai's Mashreq Bank declined to handle payments from at least 2 refiners in Emirati dirhams as requested by the supplier, according to 3 sources familiar with the matter. Russia has been hit by sanctions from the United States and allies following its invasion of Ukraine, and Moscow has requested some buyers of its commodities pay using rubles or other currencies than the dollar and euro, which its contracts are typically priced in. Traders supplying Russian oil in July had asked at least 2 Indian companies to settle in dirham. An invoice from one of the refiners seen by Reuters showed oil payments were calculated in dollars while payment was requested in dirhams. Next, we have the top news in metal markets. Ample aluminium supplies and weaker demand because of slowing growth will push the market into surplus despite production cuts in Europe and China due to power problems and consumers shunning Russian metal. The result, analysts say, will be lower prices for longer than previously expected for the metal used widely in the power, construction and packaging industries. Aluminium on the London Metal Exchange at $2,100 a ton is down nearly 50% since hitting a record high of $4,073.50 a ton in March when worries about disruptions to Russian supply due to the war in Ukraine boosted prices.
Copper prices recovered from a more than 2-month low on Wednesday after the dollar weakened, with worries over a likely recession and sliding metals demand capping gains. 3-month copper on the London Metal Exchange was up 1.3% at $7,451 a ton by 16:15 GMT after falling as much as 1.8% to its weakest since July 21. The dollar earlier hit a fresh 2-decade high against a basket of currencies, but eased into the red after the Bank of England stepped in to prop up the gilt market.
We will now look at the top news in the agricultural sector.
Sunflower oil's premium over rival soy oil has narrowed and the oil has started gaining lost market share on rising supplies from top exporter Ukraine after a UN-brokered corridor through the Black Sea came into force from August. Sunflower oil prices have dropped by nearly half from their record high hit in April. Ukraine, a major agricultural producer, was left unable to export through the Black Sea after Russia's invasion on February 24 until the agreement of the grain deal, which promises safe passage for ships carrying crops.
That is all for today's news on commodity markets. Stay tuned to TradeFlow News as we continue to provide you with more updates. We also invite you to follow us on Twitter at TradeFlow News, which allows you to watch our program on your mobile device or desktop to receive information from there.